let's get to the earnings later. I just want to first talk about the big news today with the Tokyo Olympics being postponed. Anta, of course, is a sponsor of the Chinese Olympic Committee. You follow a lot of consumer stocks as well. How does it impact their business, if any, now?
Well, as you can see, firstly, thanks for having me. As you can see from the share price performance today, the stock's doing relatively well, and the competitor leaning as well doing well. I think largely this was factored in. The management call yesterday cited that they might see some benefits coming from the spend on the A&P side, and it allows them a little bit more room to be flexible and nimble here to reallocate some resources. So in actual fact, I think it's a little bit of a non-event given that it was largely factored in by management and the market as well.
So in terms of now tracking just the coronavirus outbreak, I mean, do we just write off the first half for sporting brands like Anta? How big of a hit do you see when it comes to some of their big names, their big brands like Fila and Amer now?
Well, I think the 2019 results showed that Fila particularly is having strong momentum there. So assuming that the trajectory of the virus is on the pathway to recovery still for China, we don't get a relapse. The management were citing between a 10 and 15% revenue hit for first half. But interestingly, they did say that March is actually faring better than they expected, which is a little bit different to what we're hearing sort of from the overall retail sector, where you've got the traffic coming back, but the sales is really quite sluggish still. So in terms of the first half, I don't think it's a complete write-off. I think more it's, you see the share price drop, but we can easily get back to $65 and from here, as long as this virus recovery globally, I think, is on the pathway towards a full recovery for China.
But Claudia, just yesterday we had the Beige Book suggesting a collapse of the Chinese economy, and of course we're talking about a global recession. How are you factoring in, pricing in all the risk of this recession?
Well, actually, interestingly, we really positioned ourselves in high earnings resilient companies, so that we're able to really have a lot of comfort over the earnings impacts, and then correlate that to the valuations. So for us here, we see from a China-specific standpoint, for some of the companies we're investing in, actually earnings to grow, and that was consistent as well with Anta's comments overnight. They're looking for earnings to grow year on year for 2020 still. So, our base case thesis is that this is not like a 2008 recession, and the stimulus will drive the market going forward with the downside risk of the global recovery. But, you also have to factor a treatment or a vaccination coming out, which is, an outside case, which is almost impossible to put into, company-specific models.
There is a lack of clarity yet. I'm going to ask you to look into the crystal ball. If you had to pick 3 top picks, what would they be?
Well, we added to our position in Tencent after the results. We were really encouraged by actually the growth in the international gaming, which will be supported now as the countries outside China go into lockdown. We also added to Yonghui Superstores because the crystal ball doesn't really need to show that they're doing very well under this current scenario, and the next catalyst that we should see for that is some change in the wet market regulation, which, if we look back to the SARS issue in the early 2000s, that came at about 6 months later. So we're still waiting for that as the next catalyst to drive that stock higher. And then I'm also looking at some global plays, I think, that have been hit in Asia. So Tektronic has about 70% of their revenues coming from the US, a very high-quality company, and it's very difficult to ever get this stock cheap, quote unquote. But currently, right now, it's really factoring in a pretty dire outcome, and we see that as being a very a name that's going to be on the top of a lot of people's shopping list if we do see a recovery for the U.S.
Yeah, and if you look at what just the Chinese have bought and not bought in February, it seems like it was food, beverages, medicines did well. We saw the biggest drops in autos and furniture. Booze and liquor fell some 15%. Do you just focus still on some of these essential goods, or can you actually start dipping your toes in some of these consumer discretionary names too now?
Yeah, I think it's definitely important to start having a look at them. The consumer confidence, I think, is what we really need to see, which will be directed by some policy support to the SMEs, which is a big employer in China. And then we'd really be looking at dipping our toes, probably first in the home appliance space, given you've got some other drivers there. You've got 5G, which we're hearing the penetration there is actually being faster than 4G, even with this virus. You also got pent-up demand from this period of non-buying. And then you had strong housing completions in the second half of last year, which will follow on to support that. So that would probably be where we first look, and then would maybe go into the autos and property space. But I think it's still too early for those.
And before we go, Claudia, you have a call when it comes to Alibaba as well. We broke the story about how SoftBank might be selling its stake in Alibaba. Is that going to be bad news for the stock, you think?
Yeah, I mean, if you look at Alibaba from a global standpoint, which, a lot of investors in the stock are global investors, it's held up extremely well. I think this will remain an overhang on the stock, as well as all the commentary coming out of corporates in China, where they're looking for cutting expenses, and a lot of the variable costs are coming from the marketing side. So I think that it's going to be tricky to see it outperform from here. So it would be something that we're really considering, maybe as a pair on the short side versus some of our longs here.